Good evening. This is the Elliott Wave update for the Nasdaq 100 and the S&P 500 for Thursday, January the 19th, 2023. The markets continued lower initially and then did finally to start to move up. So I've updated the Elliott Wave labeling, and it does appear that we have now completed minute wave 1 of the beginning stages of our minor third wave, which is again a part of an intermediate third wave. So big picture down to the little picture. On an intermediate degree, we have completed, let me just take this up. We'll start here on our 4-hour chart so we get a look at that little bit larger picture. So we're constantly keeping that in mind. What we've got going on is we have intermediate wave 1, intermediate wave 2, and then we had minor wave 1, minor wave 2, and now we're starting down in a minor third wave within the intermediate third wave, which is the overall downside move that we're having. And within that minor third wave, back down to my hourly chart, and again, open this up just a little bit here so we can look inside. We have completed minute wave 1. Now, those who may be new to Elliott Wave, remember that I've always discussed that Elliott Wave is a series of building blocks. And when you're beginning a new count, you start with as much data as you can get on a particular market that you're looking to now analyze on an Elliott Wave basis. And you begin with your big picture. And what you're doing is you're counting 5 waves, 3 waves, 5 waves, 3 waves, until they all come into view as building blocks. So by taking it then down, if I go from a monthly maximum chart to a weekly chart, to a daily chart, to a 4-hour chart, to a 1-hour chart, now I'm down to much smaller degrees. But the fact that Elliott Wave operates in the same fashion, where we have 2 types, we have an impulse move, which will be labeled 1, 2, 3, 4, 5. And then we have a corrective move, which will be labeled ABC. So impulse moves are 5 waves, corrective moves are 3 waves. And then we break down further into that because, as we all know, that within that corrective wave patterns, which they are ABC, but there are about 13 different variations of them, and that can always make a corrective pattern more difficult to trade and also to analyze. So we're back into impulsive moves, which does make trading a little bit easier because they're recognizable that they're impulsing, and that within this minute wave 1, we can count, again, 5 waves down. And I'll go down to the hourly chart, and we'll see if we can get it. And actually, I'm going to have to go down to the 15-minute chart because, as I suspected, the 5th wave really kind of kicked in all and of itself in a extended fashion. So right here, we can kind of start to come in. We had 1, 2, then we had 3. This would have been wave 3 of 3, 4, and then we had a 5 of 3, 4, and then we started to subdivide again, got a little active with some numbers this morning, and then came back down to finish in a 5th wave for minute wave 1. So all these were sub-minute degree, but nonetheless, they still formed their 5 waves. We had 3 up, 5 down, 3 up, 5 down. And that all works like a charm. Now we're inside our minute wave 2. I know, right? It took us basically a day and a half to get down here, and we're already in a second wave correction, which looks to be, it's going to turn out to be a zigzag. Why? Because the A wave appears to be 5. 1, 2, 3, 4, 5. So if I put an A up there, now I'm looking for a B wave, and I'm not sure that this is all going to be complete. If that did not complete that B wave, it may have. And I'll tell you why, because during this whole process, Netflix came out with their earnings today. reported that they had a 4% increase in new memberships that people want to pay for the ads. I'm like, okay, well, they love it. It just seems that traders, whomevers are out there, and I actually think in terms of the way that they reacted to this, there were way too many traders short Netflix coming into earnings because they weren't supposed to be very good. They were supposed to be reporting that they're not going to get the revenue they thought from this new pay-for-ad service. But they loved them. And the stock went up $22 right now. So that immediately had a nice effect on the Nasdaq, which we saw. We went up, we rallied, and then we dropped all the way back down into the close, approximately about 11,350-ish. And then came those earnings, and the market zipped up real quick to 11,415, came back down, and now it's just kind of sitting in between. Now, true to form, what we're going to be looking for is the possibility we could go down. We should not, because this should be a zigzag. So I'm almost believing that what we're going to get here, and this is a 15-minute chart, is that this is A, this is going to be B, and we're working our way to start the C wave. Now, what I can do is, and I'm going to put those in now, and we're going to use the 15-minute chart so I can get a cleaner view. We're going to be looking at the retracements. So I use Fibonacci retracements to get those retracements for a wave 2. Now, we just finished a wave 2, and as we know, the most common for that is that a wave 2 has the capability of coming up between 50 and 62% of wave 1. Okay? Wave 1 ended up being about 450 points, top to bottom. So we can get a decent bounce out of this. At a minimum, again, I'd be looking for at least 3A2, which puts us up at 11,481-ish. Right, and we also got the hourly, or excuse me, the 15-minute 200 sitting at 11,475. Let me take this back out to the hourly chart, because those are the moving averages that we talk about within our analysis. So as you can see, yesterday we got them all coming down. Now we got the 20 coming down strong, the 250 coming down strong, and the 200s down here is flat as a pancake. So it's coming down, it started to flatten out before it starts to go down, then we went up and that kept it flat. So that seems to be sitting right at 11,413, 414, right in there. That seems to be holding. We went up, failed, we went up, failed. If it's going to be a true ABC, I'm looking for it to go up and get itself up here. That would be a minimum. 11,480, 81, 11,500-ish. The break above that, we'll get a little extra boost. Then we get up to that 50%, which is at 11,534. If it continues to get a good boost, and I remind you, tomorrow is expiration. And Netflix, and we got a lot of stocks where we can already see that they were coming in and what they're going to try to peg for tomorrow, particularly in Tesla, which dropped back down. They were up above 130 yesterday. I think that's where they're going to try to head again, because obviously you can see they've got it up $3. Now, what Tesla's got to do with Netflix? No, none. But they're going to buy it up because I believe they're trying to get it ready for expiration. Then we have Meta, which suddenly caught fire, and it's now trading up again above 136. What are they going to head for? 140 maybe? Apple continues to have that largest point at that 140 strike. And I haven't gone and checked today to see where it's sitting in between others. But, you know, you just check and you see where all this volume is coming in on what strike. It tends to pull the gravity towards that strike price. And that seems to be where Apple might try to get itself back up to 140. Now, if that all comes in, getting up above 11,500 should not be much of a problem. Now, conversely, what's going on still is that we are in the beginning of a down phase. We're beginning of the next impulse down. So we had a lot of that additional selling coming in today. None of that's actually going to change because the reasons for it have not changed. What changed is that we have an expiration tomorrow. So a lot of things are going to get pegged to the expiration, and then maybe we pick up again on Monday. So that's why we're in another corrective move. I am hoping this is not going to look anything like this. But again, here you go. We had intermediate wave 1 and 2. We had minor wave 1. Here's minor 2. Now we're in a minute wave 1 and minute wave 2. Should be smaller, much smaller in height and depth and everything in between. Also in time. So it would not surprise me that we can get our ABC2 complete by tomorrow's close. Would not surprise me. We'll check that out and we'll see. But right now, here's our potential. 11,481, 11,534, 11,588, I'll call it, and a sincerely strong push, 11,626. There are some that out there that are feeling that, yep, we could just keep going. What we cannot do in a wave 2 is exceed the starting point of that wave 1, which is 11,759. That was the high from yesterday. So we can't get past that because then it's not a wave 2 correcting wave 1. It'll be something else, likely still within this form. And I'm not expecting that. Really, I'm not expecting that. So it would be a surprise to me, but it certainly can get up to what Fibonacci tells us are the most common levels for a second wave. All right. Moving average wise, we can see it hourly. The rally's really not turning anything other than just the 4 and the 8, and even they're gone flat now. So we're going to sit probably in these levels, up and down, up 40, down, up a little bit here, down a little bit there, and see where we end up by the time we get ready for tomorrow on the U.S. opening. Over in the S&P, it is pretty much the exact same thing. Looks a little bit different. So what I want to add here, these are our numbers for that continuation of that third wave. And again, today, I even called that, said, well, maybe we'll get down to 38.83. Looked like we would. Boom, we stopped, we rallied. Then we got the Netflix, and even the S&P popped on that one. So let's take a look at where our wave 2 resistance is going to come in. Again, this 0.236 is for this larger drop, which we've already exceeded. Maybe resistance on the way back up, but I think this is where we go. And we've already exceeded that, dropped back below. And so what we've got going on is we're going to find we will find support at 39.32 to 39.40. I'll give it both. Then we have 39.52, which is the 382. 50% is 39.67, 68. And then 618 is 39.83. Is there a possibility we can get back above 4,000? I can't say no to that, but it would have to be a pretty strong push. And against what we have now got stacking against the market, it would have to be ignoring quite a few things to really get that push going. And people have to have a solid reason why they're going to come in, whether they're now believing that next week's earnings reports are going to start blowing the doors off, simply because Netflix, which really didn't come in to say they blew the doors off, they made some good money. But this, and again, overreaction, I don't know. I don't evaluate on a reaction. Is it over? Is it under? I can say that I think it looks like there was some short covering and continues to be some short covering, because even earlier as I was watching the market after the earnings report, they ran it up to 343 and then dropped it all the way back down to 423 and then raced it back to 330 and then raced it back to 335, et cetera, et cetera. So they keep bouncing it around, but they're holding it right here for now. This they're seeing is fair value. But in the S&P, same deal. We got minute wave 2, A, B, or we get a little bit more downside for a B, but it should not break that. If it does, then that minute 2 is going to go right here, and it's going to come in weak. Again, I'm not going to get fooled, but I can give you what it would suggest should the market decide to go back down, break 39.01 and keep going. Either that or I'm off on this count, and we haven't completed that minor wave 1. If it comes down heavy and just starts breaking down, then it is a minute 1, and this is a minute 2, and we're off in the minute 3 of minor 3 of intermediate 3. Should be a very strong push down. So again, what to look for so that you have an idea. If that's what starts to occur, then I'm going to be more in line with, oops, we're in that next impulse down. But right now, I'm thinking that we got an A, a B, and we're going to get a nice little C wave up and likely end up 39.52. So again, we have moving average-wise, we've got the 20 at 39.30, I'll call it. We've got the 50, which crossed the 200, the hourly 200 today, right about there. And you can see what happened. Ding, 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 ding. It just goes right on. And that is at 39.55. We've got the 200 at 39.59. So they're pretty close to each other. Then we have 39.67, 39.83, 39.94. This one I'm not looking for. It's up there, but I wouldn't be looking for it. They might try to get up and touch it, but I think then it's rejected. That's just my thoughts. So I think we're really just pushing through it as it should be. So it seems to be following pattern and following structure pretty cleanly right now. So I'm going to continue to look for it to do so. It might throw us a curveball again tomorrow. Expiration. Let me see what we got coming out tomorrow in terms of figures. Existing home sales. Boop, that's it. And they don't come out until 10 a.m. So we don't have anything major in terms of figures and economic numbers coming out tomorrow. So again, expiration. That's going to be the name of tune for tomorrow. It could be a very wild expiration, or it could be very muted expiration. If everything is where they're expecting it to be, or where the larger players would like it to be, it's within a range, we could trade in a very small range. Or we could see some extreme movement if Netflix continues like now, just as I've been sitting here talking, they've added another $1 to Netflix. If Netflix goes back above 340, then I would suspect that the market here is going to end up back again, likely above 39.40, and push its way up into these next resistance zones. And that's going to be it for today. On Saturday, I will be doing 2 podcasts, actually. One would be my weekly update, the big picture update. And the second is going to be, I am going to be doing with my guest. And my guest this week, which will likely be published during next week, will be Dan Ascani. Many of you heard me speak about him, and he was one of my teachers, one of my first teachers with Elliott Wave and Fibonacci. And then he and I became friends. We still are friends, and published a lot of work together when I was in Europe, and we analyzed the markets. I covered the US, I covered Europe. And so it is something that I'm very excited about doing. We're going to be, basically, our focus will be on gold and other things that are affected by it. So I'm very excited to have Dan, but also included on Saturday will be my weekly podcast. All right. So we've got that to look forward. The next update for the Elliott Wave update, excuse me, will be on Sunday, the 22nd of January.